Hi everyone, I'm attorney Aiden Durham with 180 Law Co. in Denver, Colorado, and you're watching All Up in Your Business. On this episode of All Up in Your Business, I'm going to break down the differences between an LLC and a corporation. But before we get into it, please be sure to like, subscribe, and share, and check the description below for links to download my free guide, How to Pay Yourself in a Single Member LLC. Also, new exciting announcement, All Up in Your Business now has a membership available. If you want special early access and members only access to All Up in Your Business videos, or access to special members only live videos and live chats, or behind the scenes videos, check the memberships tab or hit that join button on my channel homepage. All right, LLCs and corporations. What are they? What's the difference? Now, a little heads up, when I talk about corporation, I'm talking specifically about the entity type corporation and its default tax status, which is C Corp tax status. So this is going to be all about just generic normal C corporations and not specifically S corporation tax status. If you want to learn about S corps, check back for previous videos where I talk specifically about S corps. LLCs and corporations are both state-formed entity types that businesses can choose to operate as. When an LLC or a corporation is formed, it becomes its own separate entity, separate legally recognized entity apart from its individual owners. When it comes to formation, it's pretty similar for both. An LLC is formed by filing a document. It's normally called Articles of Organization. You file that with the Secretary of State in the state where you want the LLC to be formed. A corporation, on the other hand, will file Articles of Incorporation. Typically, the Articles of Incorporation are going to be a bit more lengthy and detailed compared to the Articles of Organization for an LLC. This is all going to vary depending on the state, but generally speaking, there's a lot more that goes into the Articles of Incorporation versus the Articles of Organization. And then when it comes to other corporate formalities related to formation of the business, a big difference lies in that corporations are typically required to do certain things. Like corporations are often required, they must have bylaws, they must have an organizational meeting of shareholders, they must have annual meetings. Again, this is all varies depending on the state, but for most states, there's going to be these musts of this is what must happen along with the organization of the corporation. Versus the LLC, where those statutes typically say may. There may be an operating agreement where a corporation has bylaws which govern how the corporation is managed and owned and the rights and obligations of the owners and the shareholders. That document for an LLC is referred to as an operating agreement. That operating agreement is usually permitted, but it's not required, whereas the statutes for corporations say must have, LLC statutes typically say may have. However, we know from court history and legal precedent that even though states don't require these documents for LLCs, even though they say you may do these, it's still a good idea. We know it's still a good idea for LLCs to have operating agreements, do annual meetings or regular meetings, and to follow a lot of those same required formalities for a corporation. When it comes to ownership, this is a pretty big difference between an LLC and a corporation. LLCs are owned by members. The members are the ones who own the LLC. Corporations, on the other hand, are owned by shareholders. An LLC can be managed and run, and the day-to-day operations can be handled by the members themselves, or the members can elect managers to oversee the day-to-day operation and have certain roles and responsibilities that the members might otherwise have. This is called a member-managed or a manager-managed LLC, depending on how it's structured. Corporations, on the other hand, are typically managed and overseen by a board of directors. This board of directors essentially reports to the shareholders. So the shareholders own the thing. They will appoint a board of directors to manage the thing and make those big decisions, typically, with some overseeing and oversight by the shareholders. And then officers will typically be appointed or hired to actually do the day-to-day operations. So you'd have a CEO or a CFO, and these officers, that's what the O in CFO or CEO stands for, officers. These officers are the ones who are actually present doing the day-to-day things at the direction of the board of directors. The nice thing with LLCs, so we know that they can be member managed or manager managed, but again, there is a lot of flexibility with LLCs because of those mays that the states put in those statutes. There's a lot of flexibility. So they may be managed by a member or by a manager, but in some states it's permissible to have a board of directors kind of structure with an LLC too. It would be more like a board of managers who oversees and makes the big decisions, reporting to the members, something like that. So again, the structure typically is very different, but with an LLC, you really can structure it management-wise to be pretty similar to corporations. There's no limit on either side between corporations and LLCs to how many owners there can be. There's no limit to how many members can be in an LLC, no limit to how many shareholders can be in a corporation. Again, specifically, I'm referring to C corporations, which is the default way that a corporation is taxed, and I'm going to get into that in just a sec. But compare this with the difference of an S corp, where there is restrictions on how many shareholders there can be and the types of shareholders that can be in an S corp. When we're talking about a C corp, just a normal default corporation, those restrictions don't exist. There can be unlimited numbers of shareholders. They can be entities, individuals. They can be foreign shareholders. There's really not a whole lot of restriction. And same goes for LLCs. Members, there can be unlimited numbers of them, and there's really not much requirement for who can be a member, aside from what restrictions or requirements might be set out in the LLC's operating agreement. And corporations can have different levels of shareholder, different classes of shareholders, or different classes of shares. So basically, shareholders can have varying levels of rights in a corporation. And while LLCs don't necessarily have shareholders, because LLCs don't issue shares, they issue membership interests. So the members, they own membership interests, whereas the shareholders of a corporation own shares. So LLCs don't really have shares or shareholders, but it can have multiple members, and there can be varying level of rights between those members, similar to a way that the rights would differ between shareholders in a corporation. When it comes to transferability of shares or membership interests, in other words, the ability to transfer your ownership to somebody else if you own shares in a corporation and want to sell that or transfer it to someone else, or in an LLC. Transferring shares of a corporation is typically can be done easily and without restriction. This is dependent upon if there is a stock transfer restriction in the bylaws or in the shareholder agreement. If there is some restriction placed on the ability for shareholders to transfer their shares, then those restrictions apply. But without that, shares can be pretty freely transferred from one owner to another. This is why corporations are pretty popular for companies that are seeking big time investors or companies that want to go public. If you have goals of making your company public, like selling public shares on the public stock market, then going with a corporation structure is typically going to be your best bet because that allows you to freely issue shares to shareholders. LLC membership interests can also be transferred easily in the same manner that corporate shares would. Sometimes LLC membership certificates are issued. Like with corporations, you'll typically receive a share certificate to evidence ownership of those shares. LLCs, again, don't have shares. They have membership interests, but sometimes LLCs will issue certificates evidencing the membership interest. So again, those interests, generally speaking, can be freely transferred whenever you feel like it, but most states by default require the consent of all of the other members before you transfer your interest or a new member joins. So if your LLC doesn't have an operating agreement, then the rules will default to the state statutes, and most states require unanimous consent of the members in order to permit a transfer or acceptance of a new member. So you can still make that transferability a lot smoother and less restrictive if you describe that in the LLC's operating agreement. Again, this is really one of the biggest benefits of LLCs is how customizable they are. There are very few restrictions on how an LLC can be structured, how it can be managed, and all of that. Now, taxes. This is the most exciting part of LLCs versus corporations and really the biggest difference between the two. So as I mentioned, by default, when you form a corporation in your state, if you do nothing else, then by default, your corporation is taxed as a C Corp, which means it's taxed under subchapter C of the Internal Revenue Code. Now you can elect for the corporation to be taxed as an S Corp, which means it's taxed in accordance with subchapter S of the Internal Revenue Code. But again, just by default, it's taxed as a C Corp, so that's what I'm going to talk about. If you want to know about S Corp taxation, check back to my old videos. So a big benefit of being taxed as a C corporation is that corporations have a bigger variety of deductions available to them, primarily in terms of employee fringe benefits. So oftentimes this isn't going to be a big deal for smaller companies, solo business owners. This doesn't matter. But if you're a larger corporation, if you have many employees and you offer fringe benefits like medical reimbursement or something like that, then with a corporation, much of those expenses can be deducted, whereas they may not be fully deductible with an LLC or an S Corp. So that's one of the big differences. But the other real big difference is that corporations are subject to double taxation. What does this mean? What's double taxation? So let's talk in terms of LLCs. LLCs are considered pass-through entities, which means that the income and the profit and the tax liability passes through to the members of the LLC. The LLC doesn't pay its own LLC tax. There's no income tax to the LLC itself. It all passes through to the members of the LLC, and they're all taxed at their individual tax rates in accordance with their percentage or their portion of interest in the LLC or their allocation of the profits and losses. Whereas in a corporation, the corporation does have its own corporate tax. When the corporation makes money, it pays tax on the income. Currently, the federal corporate tax rate is 21%, but then states have their own corporate tax rates too, which vary. And then the US tax rate changes often too. But the important thing to remember is that the corporation has its own individual tax that the corporation pays. And then if there is a profit and the corporation distributes profits to the shareholders in the form of dividends, once the shareholders receive those dividends, now they're paying tax on their interest in it as well. So that's what that double taxation thing is. Money's coming into the corporation's paying tax on it, the corporation is paying dividends to the shareholders, and they're paying tax on that. So that's typically the biggest drawback to being a corporation taxed as a C Corp, is that for a lot of businesses, that double taxation is going to be a big hit and a big tax bill that is otherwise, unnecessary if you operated as an LLC, pass-through entity where there isn't that corporate tax and that double taxation. So that really is the primary difference, the biggest differences between LLCs and corporations. Namely, it's how they're formed, the corporate formality requirements, and how it's managed and taxed. So now that we know this, how do we decide which is better for your situation? How do you know if you should go with an LLC versus a corporation for your business? It's important to think about what you're wanting for your business, what you're hoping to get out of this formation, and what you're willing to deal with. If you want something that's going to be easy, not a whole lot of management involved, not a whole lot of compliance or paperwork, if you want it to just be easy, then the LLC is going to be the way to go. This is especially common with single member LLCs, companies where there's one owner. Almost always the LLC is going to be a good option because it's so easy. You don't need that double taxation. There's no purpose for it, and it gives the member, the ability to really run their business however they want. LLCs are usually also a good idea if all of the members, if all of the people who are going to be involved want to be actively involved in the business. If everyone wants to play a role, play a day-to-day role in the management and everything like that, then an LLC is usually going to be the best idea because that allows, with a member managed LLC, all the members can act on behalf of the LLC and can participate in the day-to-day operations. Versus a corporation where the shareholders, who are the owners, they have, for the most part, very little say in what happens with the business. They might get to vote on little things here and there, but for the most part, it's the board of directors who are directing and managing everything. So again, a corporation might be a better choice if you are looking for investors who don't want to have any actual involvement. They just want to give you money. Or if you have goals to become public one day, then a corporation is going to be a good option for you in that case too. These rules though, these certainly don't apply to everybody. There are definitely going to be single member LLCs out there who would benefit more from being formed and operated as a corporation and taxed as a corporation. There are always exceptions to every rule. So just because I say LLCs are typically good for this, typically bad for that, that doesn't mean that specifically applies to you. So if you're unsure of what you should do, if you should form your business as an LLC or a corporation, it's a good idea to consult with an attorney in your state to figure out if one is better than the other for you. That's all for this episode, folks. Drop a comment below and let me know what you think. If you have questions about corporations or LLCs, you can comment those too. Do not comment, though, a question about should I form an LLC for my business or should I form a corporation, because I don't know. I know nothing about you or your business. So don't ask me those questions because I won't answer them. Again, be sure to check out the new memberships available in All Up in Yo Business. You can get special early access to videos or access to members only videos and even access to special members only live videos and live chats, behind the scenes videos, all kinds of fun stuff. So check the membership tab or hit that join button if you want to learn more. Thank you all so much for watching. I'm Aiden Durham, and I'll see you next time.